So that's why I'm still establishing the fact that do not limit yourself to what you hear me say alone. All right. The more time you spend on the chat, the more you understand what you are being taught because you already have the template. It means you already have you already have things to focus on. You already have a pathway to follow. So opening the chat, you're not just paying attention to everything on the chat. You're paying attention to specific information that you already have, specific information that Scofield has already given to you. So every time you go into the chat, now you know what you are looking for, you know what you are paying attention to, you have something specifically you want to pay attention to. All right. So do not let anybody deceive you by saying you cannot get better than your mentor, you cannot be better than someone putting you on. All right. You can 100% you can. So it depends on, like I said, it depends on if the mentor is now comfortable being, if it depends on if whoever is putting you on is comfortable being where they are. All right, at the end of the day, nobody knows it all, which means we need to put in conscious effort. We need to put in conscious effort to get better from time to time. All right, so that is it. And I'm still underlining what I said. Do not limit yourself to what Scofield has taught you alone. All right. Scofield has given you the templates. I have given you the pathway. All right. So pay attention to the charts. All right. Pay attention. Remember something I often tell every one of us. As much as you're paying attention to the information I'm sharing, Scofield is sharing, you also need to pay attention to the quality of person, to the quality of who you are. All right. That plays a huge role. It's not enough for you to have access to the right information. It is also very important for you to actually be that kind of person that can make use of the right information properly. All right, so I saw a chat on this. So I'll just start from, I was kind of wondering where to start from, but then someone just put in something on the chat and then in the group. So the person said, what is the, he has been seeing some persons talk about CRT. All right, this particular thing, we have spoken about it several times. One thing I often tell every one of us is the fact that, see, there are different names attached to different things. For instance, when we treated FVG, I said FVG is also regarded as FVG is also regarded as imbalance, that is IMB. It's also regarded as insufficient price action, that is IPA. And what is this? This is still referring to the same thing. Imbalance. FVG, IMB, IPA refers to the same thing. There's also this thing that people tend to, there's also a part, whenever people talk about, say, strong guy, all right, say strong guy. Some people also call it protected eye, or yeah, protected eye. That is as regard your sweep of liquids and record structure stuff. And then there is also something else. I think there is we have QM level. All right, we have QM. You can refer to it as the level that got disrespected two times. That is something like this. You can see this guy got disrespected two times. So this is what some people also refer to as QM. This extreme level, this guy is also referred to as, some people call it apex level, some people call it extreme, some people call it last resort, some people call it V level, some people call it head, head and shoulder. All right, so this is more like bottom and shoulder right now, bottom and shoulder. All right, so see, and yes, so and for what we're actually talking about, what is bringing about this conversation, which is as regard CRT. So basically, CRT means candle range theory, and I believe I've actually used this particular statement, this thing. All right, but then personally, I just choose to refer to it as single candle liquidity. All right. So I referred to it as candle range during when we treated the range cycle. I refer to it as as candle range when we treated when we treated range cycle. And this I have been referring to this as this for a long time. So it means it is still the same thing whereby price takes out this guy All right, whereby you have a single candle price probably just takes out this one right here. All right, price takes out this one, and your expectation is for price to, at the end of the day, come back to take out this one, and the same thing right here. There is no difference. All right, unless you want to tell me there's a difference between FVG and IPA, unless you want to tell me there's a difference between imbalance, I mean between V-shaped key level and apex key level. Unless you want to tell me there's a difference between strong and protected, there's no difference, right? So try as much as you can to not let these things confuse you. This is very important because it's actually kind of funny. I can see the person said, "Oh, Scofield has never mentioned anything about CRT or whatever." See, these things they are the same thing, and I feel like that person, I think that should be Mr. S. You're also getting something wrong. I never said you can use this as confirmation entry. No, unless you have not been paying attention to everything you have been talking about. I never said you can use single candle liquidity as, so if you want to call it CRT right now, I don't know. I never said you can use this one only as confirmation entry. No, I have never said it. I have never said it. In fact, what we started before we started talking about confirmation entry, we spoke about storyline, which means logically we said what we said was that you can build your bias using liquidity. So probably you've not been paying attention, or probably maybe you are just caught up in, I don't know. All right, this is what some people refer to as CRT, but it is also the same thing I choose to call single candle liquidity. All right, single candle. Single candle liquidity simply means there's liquidity resting at the top and at the bottom of a candle. It could be your monthly candle, it could be your weekly candle, it could be your daily candle, it could be your H4, it could be your 1 minute candle, depending on the perspective you are seeing it from. All right. So CRT, SCL, some people also call it single candle formation. All right, single candle formation. It is still the same thing. See, don't get yourself confused. Single candle formation, it's still the same thing. All right, be it single candle liquidity, be it single candle formation, be it CRT, it is still the same name. I mean, different names, the same subject. All right, so probably you might just need to pay attention to everything that we discussed as regard storyline, and then probably as regard trading ranges. Because I'm saying it again, I cannot remember me saying you can only use single candle liquidity as confirmation entry. No, I will never. I have never. All right, so I'm trying to, call you guys' attention to probably what you guys are maybe understanding right now. And everything we're going to be talking about still revolves around the same thing, the same structure that we have right here. All right, so that is that as regard me calling you guys' attention to all of this now. So let's go straight into why we are here tonight. Although it is still very much related, because we are talking about logic on liquidity, and we cannot talk about logic on liquidity without talking about single candle liquidity. All right, so yeah, so we cannot talk about logic on liquidity without talking about single candle liquidity. All right, so yeah, so drum rolls. So yeah, we kick off right now. So understanding logic on liquidity. So to buttress this properly, I would love to come to do a kind of recap as regard everything we treated on liquidity. All right. So we said liquidity is money, and it attracts price like magnet. It is all that price seeks. All right. So and then we said we have types of liquidity, and then we have forms of liquidity. So as regard the types of liquidity that we have the internal range liquidity, um, we have the internal range liquidity, and then we have the external range liquidity. All right, so we now understand that the first break of structure, all right, it is what often bets for us our internal liquidity. That is the first pullback after this first break of structure is what creates for us our internal liquidity. All right, so, and the second break of structure is what creates for us our external liquidity. I would just add the caveat right now. it won't always be this picture perfect. All right, it won't always be this picture perfect. So from here, what are you paying attention to now? All right, so from here now, let's just have a markup. All right, so this is our sweep of liquidity right here. And right there we have our break of structure. So the first pullback after this break of structure now, where is it? So this is the first pullback after this break of structure right here. All right, so the first pullback after this break of structure presents for us our internal liquidity, while the second break, all right, presents for us our external liquidity. All right, so when we treated types of liquidity, we're made to understand the fact that whenever price takes out internal liquidity, we expect expansion. All right, so expect expansion towards the external, and that is whenever price takes out your internal liquidity, you expect price to take out the next available liquidity, which is the external liquidity. And then whenever price takes out external, sometimes price would would retrace before continuing again. All right, so which means whenever price takes out your external now, you can expect retracement or reversal per se. All right, so you can expect retracement um to take out to take after the external, and then the purpose of that retracement is for price to take out the internal. All right, so external was taken out right there. Now this is our internal. So from here again, internal has now been taken out, so we can expect was another delivery, that is price taking out our external liquidity. All right, so this is now the internal. And from here now we can see that we have our external that was eventually taken out right there. So basically this is, this first frame right there, this first structure is our type type 1 advanced market structure, while this one right here is the type 2, that is the engineered structure. All right, the engineered structure. All right, so I believe we are following through, right? Whenever price takes out internal liquidity, you expect an expansion. Whenever price takes out your internal, you expect an expansion towards the external. That is, whenever price takes out your internal, the next available liquidity is for price to take out the external. And whenever price takes out an external, we expect price to retrace into taking out our internal liquidity. All right, so that is that. And then as regard the forms of liquidity, we also treated trendline liquidity. We treated consolidation liquidity. We treated sessional liquidity, and then we also treated single candle liquidity. And we are going to be emphasizing more on single candle liquidity as regard logic on liquidity right now. So let's take call. I believe this is a successful recap. All right. Whenever price takes out your internal liquidity, the next available liquidity that price would most likely take out is the external. And whenever price takes out the external, price would most likely retrace. And the purpose of that retracement is for price to take out the internal liquidity. All right. So now talking about logic on liquidity right now. All right. All right, so talking about logic on liquidity right now. All right, so I'll be sharing with us some. So basically, we are talking about single candle liquidity, but then we are explaining it in a broad way right now, as regard how it can several ways where you can where we can find it on our charts. So the first situation of logic on understanding logic on liquidity is that whereby let's still have our structure back. All right, so we have this. This is our sweep of liquidity, and this is our break of structure. All right, so one thing that we need to pay attention to from this guy, one thing we need to pay attention to from here is the fact that this, so there will be a candle right here that, definitely that led to this break. All right, and of course, so let's highlight the high of that candle and then the low. So this is the high of the candle and this is the low of the same candle. All right, remember something. So now we know we are bullish, all right. We know we are bullish, and even the higher time frame can also be in alignment with what we have right here. This can be your H4 structure, this can be your H2 structure, and it can as well be your H1 structure, all right. But then, it can. So what would happen after this situation right here? We're in a bullish environment, and one thing we have been able to understand is the fact that also before this, let me just quickly call our attention to something. What's happening? Before this, I need to call our attention to something real quick. All right, so I need to call attention to something very, very quickly. So we said, let me just take this, let me take this back. All right, so yeah. All right, so this is that as regard the bullish structure, and the same thing applies to the bearish scenario. All right, where you have something like this, whereby you have your sweep of liquidity and break of structure. All right, you have your sweep of liquidity, break of structure right there. The first pullback becomes your internal or price, pullback, react from a key level above the internal and then expand towards the downside, towards the external. All right, so now when we talk about single candle liquidity, let me start from this area. So this guy right there, this could be your monthly whatever candle, all right? So do not forget, this could be any candle per se. This seems too big. All right, so this could be any of your candles. All right, so from here, one thing we need to pay attention to is that in a bullish environment, we have been able to understand the fact that in a bullish environment, the low of every candle in a bullish environment is your internal, while the high becomes your external. That is, in a bullish environment, say whenever price takes out this low right there, you expect price to take out this guy being the next available liquidity. So let's have all of this right here now. So let's use this one. So let's say we're in a bullish environment right now. All right. Let's get this a little bit. So internal liquidity, sweep this one, and then we have this. All right, so let's say this is what we have right now. All right, so let's say this is what we have right now. All right, so we know we're in a bullish environment. So what we're expecting from here, from this guy now, is we're expecting price to take out this low. All right, so expect price to take out this low. We expect price to take out this low because we're in a bullish environment. So definitely we have been able to understand the fact that the low of every candle in a bullish environment is our internal liquidity, while the high becomes our external. So whenever price takes out an internal liquidity, what do you expect? You expect an expansion. You expect price to expand towards taking out the. You expect price to expand towards taking out the external, being this guy now, being this one. All right, and the same thing applies to. And the same thing applies to your bearish environment, all right? To your bearish environment. So in a bearish environment now, just flip the same thing I just said. In your bearish environment, every candle in your the high of every candle in your bearish environment now is your internal liquidity, while the low of every candle in your bearish environment, that is your external liquidity. So in this case right now, say price has been giving us series of lower lows and lower highs. All right, series of lower lows and lower highs. So now, all right, so now we're in a bearish environment. So it means we expect price now to come into this guy. All right, so the price to come into this level right now to take out this one. All right, being the internal. All right, being the internal. We see price come into this one being internal. All right, and from here we expect price now to expand towards the next available liquidity, which is this one, which is the external. All right, which is the external. So yes, so now let us now go into logic on liquidity properly right now. So those are just recaps. So going into logic on liquidity properly, definitely let's have our sweep and break of structure formation right there. So these are sweep and these are setup right there, right? So this is a setup, all right. So right there, something, we're in a bullish environment already, do not forget. So one thing we have been able to understand from when we treated storyline and entries is the fact that this high is this level is a level where we can pay attention for buying opportunities. This is another level we can pay attention for buying opportunities, and this is also another level you can pay attention for buying opportunities. So from here now, definitely a candle would be responsible for this break of structure. Definitely a candle will be responsible for this break of structure. So let us say this is the high of that candle, while this also would be the low of that same candle. While this would be the low of that same candle right there. So since I'm dealing with a bullish scenario, so let's change this color to a green color. Okay, so this is fair. All right, so from here, logic on liquidity. So now we are paying attention to this next candle, opening right hand and taking out this guy and taking out the high of this candle. So one thing we are paying attention to here is the fact that number one, this guy has taken out the high of this candle. All right, so we have taken out this one, and in a bullish environment, we said the low of every candle in a bullish environment, it is our external. So now, once price has taken out this external, we expect this same candle right here to do this delivery. All right, so it means from the what's this English now? From the normal framework, all right, from when we started, whenever price takes out at night, it's okay for you to expect price to run over this one. All right, so now this high has been taken out. So what can we expect right here? This same candle that has taken out this external, we now expect this same candle right now to do what? To take out this internal. All right, so external has been taken. It is okay for us to now expect price to take out what? To take out this guy being the internal. All right, and we pay attention. SLK is all about you paying attention to structure resting close to a key. SLK is all about you paying attention to a liquidity resting close to a key level and then subjecting to structure. All right, we are bullish. We're in a bullish environment. So this automatically, it makes this high right now our external liquidity, while this is our internal liquidity. So now the external has been taken, and this same candle is what we're expecting to do this to finish up this delivery for us. All right, so now this guy would now react from a key level below, and from here we can now expect what? We can now expect our bullish this thing to continue. All right, so it means internal has now been taken. This guy now becomes our new external. This one right here becomes our new external. All right, before this, we took out the external. It's okay for price to take out the internal, which is that same low of that same candle. So the second scenario is that's where we would have something like this. The second scenario is that's where we would have something like this. The same structure, all right? We would have something like this. Something like this. All right, so yeah, so we still have our candle intact. No. Now this. Yeah. Yes, sir. All right, so this is the candle high. All right. This is the candle low. This is the candle low right here. And of course, we expect the next candle to do something like this. To take out the high of this one and then close below. Not close below per se, but then I'll finish it up right now. So we expect the high of this guy has been taken out right now, which means the external has been taken out. All right, so it means it is very possible now for this one. You remember something, this is a value level we can pay attention to. This is another value level, and this is another value level. So right here, it means, let me change this color. So right here, it means the fact that this candle didn't take out this one directly. All right, the fact that this candle didn't take out this one directly. Let's say now, the candle definitely this one opened here, it's closed right here. This next one right here, it opens right here, all right, and then it closes right here. That's what makes it a bearish candle. All right, so now we are paying attention to something. This is our external. External has been taken. Now this should be the internal, but the fact that this candle closes within the range of this candle, all right, it didn't take out this one. So the fact that we're in a bullish environment, remember that, all right, we're in a bullish environment. So the fact that this candle right here, it closes within this range of this candle, so it automatically means this is no longer our internal logically, because we're in a bullish environment. This is no longer our internal. Automatically, this guy now becomes our internal liquidity, because what? It is resting close to a key level now that can birth buys. Of course, we pay attention to liquidity resting close to a key level. And one thing is that it is also very possible for price to still come lower to this place. But now, based on the logic we are attaching to liquidity, the fact that this guy has taken out this external, and this same candle, you can see this one right there, the same candle delivered everything fully right there. But in this case, this one closed inside of this candle, all right, and then it's now rest inside. It's not rest above a key level. So it means instead of external has been taken, instead of this one now being our internal, automatically it means what? This now becomes our new internal instead of this one. So what are we expecting right now? We're expecting the next candle to open, take out this internal liquidity. And where is our new external liquidity? This becomes the new external liquidity right there. All right. This becomes the new external liquidity. This becomes the new external liquidity. I believe we are understanding. And then the third scenario, we have about 4. So the third scenario is that whereby whereby we would have something like this. Yeah, we still have this guy. And then all right, so we'll still have our break of structure. We still have our break of structure. But then the next candle that opens, so let's still have our high and our low. We have the candle, the low of the candle right there. But then the next candle that would open wouldn't take out the high, neither will it take out the low. So it means we have something like this right now. So it means this candle opens right here. This candle opens right here, and possibly it closes inside of this one. So what you are paying attention to here is the fact that this new one now does not take out the high, and neither does it take out the low. Are you understanding? Neither does it take out the low. So in this case right now, what are you paying attention to? Sorry. So in this case, what are you paying attention to? Of course, you are paying attention to the closest, the key level closest to this liquidity, because of course now this becomes your internal liquidity in this case. All right, the fact that this one closes like this, so this becomes your internal liquidity. Let me check it. Please, are you guys understanding? You can just use the chat box. Are we understanding? Am I communicating? Or is it difficult? Is it complicated?
It's not complicated, boss. It's not.
All right. I just needed to ensure you guys are following through. All right. So this is the third scenario, and there's a fourth scenario. So I'll just hold on in case anyone wants to take a screenshot. Just about 5 seconds, just in case you want to take a screenshot. Giving it on the screen for now. 5, 4, 3, 2, 1. Right. So the fourth scenario is that where we would have something like this. So let's use so the fourth scenario is that where we would have, say you have a bearish candle, then we have this one. Let's change the color again. All right, so in this case right now, we take out the low of this one. Take out the low of this candle. You can see we took out the low of this candle right here. And then this is the high of this one. This is the high of this one. So now, in this case as well, all right, so this is the high of this candle. So in this case as well, we are paying attention to possibly something like this can happen, where price will take out this high and then close below this one. So I believe you should understand what you should have an idea of what I'm trying to create right now. So in this case right here, we have taken out this external. Remember, we're using bullish scenario. My bad, please hold on. So remember, we're using a bullish scenario, all right? So it means we have taken out the external, all right? So logically, this should be our internal. But as long as this one is closing like this, as long as this candle closes like this, it is okay now for us to now expect this to be our new internal instead of this one right there. All right, because of course we cannot pay attention to buying from this level. All right, so by the next candle would open, and now this is what you expect. Right, price will take out this internal liquidity, and then this becomes your new external. All right, so you expect price now to continue towards the upside. And if something like this also happens, where you have where you have something like this. Let me make this a bit lower. Where you have something like this. All right, so you have something like this. So it means now you are paying attention to this guy. You are paying attention to this extreme level. All right, it means we are not paying attention to this extreme level. So as long as this one closes like this, all right, as long as this one closes like this, so this becomes our new internal liquidity. So from here now, we are paying attention to buying from this guy. We are paying attention to buying from this guy. So the last scenario is that where we have bullish bullish open close key level. So from here, we'll just go straight to the charts. Kolofa. Kolofa. No go far. So yeah, so this is let me have this way. All right. So for this one right now, this is bullish candle with the midpoint that becomes our open close key level. All right. So in this case right here, this is our high, while this is the low. This is the low of this candle, and of course this is our open close key level. So now it is very possible now for this to happen. All right, it's very possible for this to happen, where this guy would open and then it will take out the high of this candle. Takes out this high. So in this scenario, all right, it is okay now for us to expect, as long as this one has not closed, it is okay for this same candle to still do this same delivery. All right, so by this same candle right here would take out this one. Take out this one. Take out this one right here. It is very possible. That is if we expect this same candle. So I mean, a lot of times you can just pay attention to something like this on your, right? You can just pay attention to something like this on your H4 time frame, mostly H4, H2. All right, even your daily time frame. But then based on the fact that we don't take entries directly from the daily time frame, so you can just pay attention to it on your H4, your H2, and your H1 time frame. So in this case right here now, if this one ever closes right here, of course we know that we are buying, we are paying attention to this guy. So this one now becomes our new internal liquidity, and of course from here now we are paying attention to entering this trade right now from this bullish open close key level. All right, so as regard all of these things I have shared, this one also relates to every one of them, whereby it is very possible now for this candle to not take out this high. So this is also possible, where this one wouldn't take out this high, and the same thing right here as well, where this one wouldn't take out this high. So it is just about you understanding the fact that in a bullish environment, all right, the high of every candle is your internal, while the low of every candle is your internal, while the high is your external. And in a bearish environment, the high of every candle is your internal, while the low becomes your external. All right, so that is just one thing I need every one of us to have at the back of our mind as regard understanding this topic, as regard understanding logic on liquidity. And let me just chip this in very quickly. And from here, one thing is, it becomes interesting from here, because now one thing you can pay attention from here is the fact that the moment now you can now apply the logic of everything we have treated as regard entries and entry confirmations, navigating entry and confirmation entry. All right, you can now apply that same logic into this guy, whereby let's say he did not even enter directly from this one. All right, now what do we have right here? Sorry. Yeah, so what do we have right here now? It means we now have previous, maybe your H4, it could be your H4 right now. Previous H4 low has been taken out. So now you are trying to follow through. Let's say you did not even enter from it directly. All right, previous H4 low has been taken out, and the high is still standing. So from here, just the same thing over and over again. All right, and could be this one as well. Let's say could be this one as well. All right, could be this one as well, whereby price would just take out this low. The next time we take out this one and and close above. All right, so from here, what do you have? Previous low has been taken out. Now I'm trying to talk about entries right now. You can see the low has been taken out while the high is still standing. But overall, we know that this is the overall external, but then based on the logic of this single candle, this is the external of this candle. But based on the logic of our overall structure, this is the overall guy that we expect price to take out. All right, so this is actually really simple. You just need to pay attention. You need to study. One thing you need to understand is the fact that your brain we humans, yeah, our brain, we understand things more from repetition. Yes, we understand things more from repetition. Now you have seen me talk about all of this right now. Just go into your chart. Just go into the chart. One thing is that, see, the chart is repetitive. What you see yesterday, you'd see it repeat itself today, but the caveat is just that it might not be in the same exact formation, but then you would see it, you would see it repeat itself. That is definitely why we have trading systems now. That's why we have trend line trading traders. That's why we have SQ traders. That's why we have ICT traders. That is because we are paying attention to series of events that has occurred over time. We are building a system from it. We are building a way to relate from it. For instance, let us say you're a footballer right now. So let me just create this picture in your head. You're a footballer right now. You know that every time you play against um, every time you play against Kanu, right? For the young ones, like Kanu used to be a Nigerian player, as a legend, right? Every time you play against Kanu, he tend to fall down. He tend to find a way to fall down inside the box 18. He tends to find a way to fall down inside the box 18. So what do? You need to build a system around the fact that, oh, every time I am a defender and I'm the one holding Kanuwaku, I will make sure that this man does not I'll make sure I don't pull his shirt. I'll make sure I don't pull his body. I'll make sure I don't even touch him at all. So as to ensure that he does not win a penalty against me. So I can see how you've been able to build a system around something that Kanuako repeats over time. He falls down inside box 18. He finds a way to fall down inside box 18 because you have studied this game over time. So that is also the same thing right here as regard trading. We know that, oh, price tends to move in series of, in swing highs and swing lows, higher highs and higher lows. And we know that, oh, whenever price takes out a low, price would take out the opposing side, which is the high. All right, so we try to build a system around it. So now repetition, repeat it. The more you repeat it, the more you would understand it. See, the more you play against Kanuwaku, the more you resist from holding him whenever you are playing against him, the more you are going to be better, the more you are going to get better around him, around defending him. That is, without holding his body, so you know that he does not win a penalty against you. I know a lot of us like football, so that's why I'm just trying to use this right now to create this in our mind. See, the more you repeat something, the more you understand it better, I promise you. It's not even enough for you to watch this video for you to say you want to repeat watching these videos. It's not enough. See, you you learn more from doing rather than from knowing. It's not about knowing, it's about doing. It's not about knowing, it is about doing. If you know and you don't do, see, when we were younger, mathematics teachers, they are very proud. They would say, math teachers are so proud. They would say, when you leave mathematics for one day, mathematics will leave you for 1 week. So which means it's not about knowing, it is about doing. That is, the more you do, the more you get better at it. The more you practice mathematics, the more you get better, the more you get better at mathematics. The more you study the charts, the more you execute, the more you get better as a trader. See, one thing is all the topics we have treated in this mentorship here. This is every of those topics, they are the best I have they are the best way I've treated those topics so far in my life. Since 2025 that I've been teaching people, I've been tutoring people, I've been mentoring people as regard, technicals. All the topics you guys have, structure, liquidity, the way I taught you guys structure, that is the best way I've taught it ever. The way I taught you guys liquidity is the best I've taught so far. The way I taught you guys skill level, the best I've taught so far. The way I taught you guys storyline, the best I've taught so far. The best. So see, you guys have the best of me. For instance, this logic on liquidity, this is the best I've explained it so far in my life. This is the best I've in all of this football example of this. In fact, this one right here, I'm not sure I used all of this, let's say price has rejected and now you have You have taken out this loan. Now you have a logic on liquidity to work on again. I have never explained it in my life. It just came to my right now that, oh, now I can even, this is a very beautiful example again. Even from your entries, you can still use logic on liquidity. It is this simple and easy. So from here, you can just work on your entries and your entries and confirmation or whatever. From here, the same thing. I kid you guys not, man. I kid you not. See, let me tell you guys something. Because I've been seeing some comments on the group. Yes, price might have been, misbehaving lately, but then, we humans here, Mishi loves companion. So don't be that kind of person that, the fact that people are also complaining while you're complaining, you're comfortable. No, bro, don't be that person. Don't be that kind of trader. Don't be that person. The fact that, there's this kind of thing about humans where, let's say I took a loss on Euro USD and easily I'm looking for someone else that also took a loss on Euro USD so I can feel good. Don't be that kind of person. Mishi loves companion, but do not be that person. All right, do not be that person. It is bad. So the fact that everyone might be complaining that, market lately has been somehow, don't let that be your submission. Don't let that be your resolution. Market might have been somehow, but then, nothing is random. That is one thing I believe. Nothing is random. You might be taking a loss, but then don't now be comfortable with the fact that, people have been saying market is somehow, so now you're comfortable with the fact that market is somehow without actually paying attention to what is it about this chart that is actually different now from the way it used to be. Nothing is random as much as you are paying attention to let me use this one to be very fast. As much as you are paying attention to buying from here, yes, copy mechanism. As long as you are paying attention to this guy that you want to buy from here, as long as you are paying attention to this guy that you want to buy from here, this is your internal liquidity now you want to buy from here. See, you also need to understand the fact that price coming down, it is also very possible for price to now to sell from wherever and take you out here. So now it means you want to buy from here, this is valid. The fact that price is also coming from wherever it is coming from does not now mean it is invalid. It means you took a loss here, but let's say you and maybe 100 other persons took a loss here. Don't be contented with the fact that you are not the only one that took that loss. No, don't be that kind of person. All right. Pay attention to what happened. All right. Pay attention to what and why. That is, pay attention to what, why, and where. Why did price actually violate this guy? Why did price invalidate it? Number one, where was price coming from? And how, pay attention to why and where, yes. Why did price invalidate it and where is price coming from? All right. So this is a way to, I kid you not, this is a way to get better, bro. I'm not even joking with you right now. This is a way to get better. So don't be that kind of person that, market has been somehow. See, for every loss I take, I investigate why I took that loss. And I find it. Sometimes you might not find it, which is okay. All right. But then, you've tried your best. And, I said something on my YouTube a while ago. I said 70% of the time you would always find why you actually took a loss. Because see, nothing, I believe, me Scofield, I believe nobody told me this. I just know nothing is random on the chart. Brother, nothing is random on the chart. Nothing is random on this chart that we are seeing right here. It is not random. There is a reason for every delivery. There is a reason for every move. Am I making sense? There is a reason for everything. All right. So that is it. So now, coming back into this guy. So logic on liquidity. Let's get it better right now. Let's understand it. So right here we can see right here that we became bearish from here. You can see we have a most recent break right here, and then price kept on presenting for us high to this low, lower high, lower low. Right. So we became bearish at some right here. So what did price do? Let me zoom it out so you can follow through. So right here we took out this low. And in a bearish environment, this low is our external. All right, and logically it is okay for you to now expect price to get here. But what did price do? This guy closed within the range. Closed within that range. And what did price do? The next candles opened and price took. So it now means this one now becomes our new internal instead of this one. We're in a bearish environment, and in a bearish environment, the high of every candle, that is your internal, while the low becomes your external. So we took out the external right there. This one closed within the range. Now, what did price do? Price came back, took out this one now as its internal liquidity, and you can see how price continued further from there. And like I said earlier, you can just work with your confirmation from there. You can see we took out this one, and what can you see right there? We have a break of structure to the downside. Where is it? This is our break of structure to the downside. So of course it means now you can pay attention to your entry, whatever right now from here. All right, break of structure right there. So now you can pay attention to your entry, whatever from here. Say you prefer to use this one right there now. Boom, this is your guy. All right, this is your guy. And now I have even seen another very beautiful example again. All right, now pay attention to something again. We broke this structure, we are still bearish, all right? So this is this high right here. This is this high, and this is this low. Pay attention to the fact that the candle that opened afterwards did not take out this low, neither did it take out the high. We are bearish, remember. So automatically it means what? This one now becomes our new internal liquidity, while this now becomes the overall external. I mean, is it making sense? Let's look for some other examples. See, you guys need to understand this thing. After tonight, see, just go and study everything we have on this group. Just go and study everything. So let's look for some. I haven't even checked the charts. I mean, really much today because I've just been trying to mind my business. So let's look for some more examples right now. This could also be another example. I am trying to just use the ones that have just weeks. All right, this works as well. All right, we took out this low. We are bearish. It's okay for the price to take out this one. In fact, a lot of persons expected it on this day. But what did price do? This guy closed in between, so it automatically means this guy now becomes our liquidity point, and at the end of the day, price still went. I mean, above a little bit, and then price continued selling off. So let's look for some more examples, some proper and beautiful examples. I think we have the same thing right here. Yes, so we took out this low in a bearish environment. We took out this low right here, logically. So external has been taken out. This should be the new internal that we expect price to take out. Right, so from here, you can see this guy closed in between the range. Right, so this now becomes the new internal liquidity. This candle becomes the new internal liquidity. And from here, what can we see? Price targeted the opposite side, and we can see how price kept expanding afterwards. All right, so let's check some more examples. So just hold on for me, please. I'm trying to look for some perfect examples. Oh, so I'm restricted. I don't know what's going on with my network. Not again. Please just, I'm sorry, please just pardon me. Just hold on, please. I don't know what's going on. I don't know what's going on now. All right now. What's this? Mm, let me check KDS now. Apparently, it's not network. So let's see what we have here. So I'm searching for some more examples. A perfect example, actually. You take out this guy. Okay, so yeah, so this is one. There is one. Alright, so look at what we have right here. We're in a bearish environment from here. We broke the structure as well. Alright. So price took out this low. So it is okay for you to expect price to take out this one. So price take out this one being the internal. What did price do? This one closed in between this range. So from here now it means what? This becomes a new internal liquidity. Well, we can expect price to just keep going downwards. So let's change time frame right now to another time frame. So you can just see, as regard your entries, this is something beautiful to always look out for. This is something beautiful you can always look out for. So I'm still looking for some examples. I don't know. As much as these things are everywhere, but then there are times that you'd look for them like your life depends on it, and then it would look like you don't even know what's going on. All right, so I think if I found one of our examples, so yeah, so this is one. All right, so see this one right here. All right, can you see we broke the structure? All right, and from the left side we can tell that we're actually bullish. All right, so you can tell we are bullish. So price broke the structure. All right, so you see the fact that this red candle right now, it is inside this range. It didn't break beyond it. It didn't take out the high. Neither did it take out the low. All right, so automatically, like we aforementioned, now it means this guy now becomes our internal liquidity. This candle. So this one now becomes our internal liquidity, and from there we can see what the price do. Price reacted from where? From the extreme level. Look at it right there. from the extreme level, and we can see how price bought from there. So this is also a good example, just like what we said. So now this is the case of where this guy didn't take out the high, he didn't also take out the low. All right, and from there you can see the delivery. So let me just check out some very random pairs right now. Say AUD card, very random pair. So it isn't restricted to only the Scofield trades. So it is everywhere. Everywhere you go, like MTN, you know what I'm saying? And let me take it to the recent action. Okay, so let's see what we have. Let me start from H4. Looking for unplanned examples can be very stressful, oh my God. But I'm still on it. Let me go to another time point. Let's say H3. All right, so I think I found one. Yeah, so I found one. So look at this guy. Look at this guy. So from here, we took out this eye. So instead of expecting, we've been taught that whenever price takes out the high of a candle, we can expect price to take out the opposing side. All right. So now this tells you otherwise right now. Why? Because the fact that this one closes within the range, within the candle, all right. So it means this is no longer your new internal. This now becomes your new internal. So you can expect price to take out this internal, then expand towards what? Towards the overall direction. And the same thing also, we also have the same thing right there. And see what I've been looking for, they look at it just appearing anyhow here. I look at this one as well. All right. Price has taken out this one. So it is okay for you to expect price to possibly take out this one right now. But then something changed. All right. From this point, you can see how this guy closes below. All right. And from here, we said you can expect price to just react from a key level closer. But one thing is sometimes price doesn't even care about your key level or your whatever. Right, as long as we said price is designed to do two things: attack liquidity and rebalance an imbalance at the specific pricing level. So from a price just took out the internal liquidity without even reacting from any key level. Look at it, you might be waiting here. All right, you can see how price didn't even care about you. And even if you decide to choose this one based on the fact that it's a level that has been tested severally, price did not still get there. The most important thing is what price did. Price took out the external, price took out the high. This one closed below. So now it means this one now becomes our new internal, while this becomes a new external right now. All right. So let me check if I can see, say, one more example, and then I just call it a net and then open the floor for questions if there is any. All right, so my final example would be this guy with this one. Oh no, maybe not one. Did we take out this guy? No, we didn't. Oh, let me see. No, not at all. We did not take out that high. So let us look for some more. Just one more. That's it. All right, so while I still look for a final example, if anyone has a question as regard as regard what we have discussed so far, you can notify, and you can as well unmute your microphone and ask your question. So if anyone has a question, you can just notify. So here is another example. Here is another example. So you see, you have them everywhere. This is just, sometimes based on the fact that I'm looking for it, I might not just, find it in handy. So that's why it happens like that sometimes. So we took out this eye, we broke structure, so it means now we are bullish, all right? We took out this eye. So it is okay for it to expect price to come back to take out this one right there. All right, so now this is the case for our open close key level. So I think this is such a beautiful final example. All right, so in this case right now, we took out this eye. All right, we took out this eye right there. So instead of us now expecting price to take out this one, the fact that this one closes below, so I can see how what price did. Price took out the internal now, so it means what this becomes our new external. So does anyone have a question as regard the topic logic on liquidity? Do you have a question, or do you have something you just feel like you need clarity about? I'll take the silence for no question. All right, so I'll take that for no question. So
I do have a question, Scofield. Yeah. So for this, right? Well, what time frame would you advise we actually like look out
you
for
can pay
this? Or
attention
is
to
it like
this you can pay attention to this on any time, on any time frame. But then you can just, look out more on the likes of maybe H4. I mentioned it earlier, H4, H2, H1. And there are times that you would come across it on your higher time frame, like let's say for instance, if I ever come across something like this on a weekly time frame, so you'd still attach the same logic to it. The only thing is just that you would pay more attention to using confirmation from there. All right, but logic on liquidity, if you want to use it as your entries, I mean, if you come across it, say in a situation whereby you are just looking for entries, so you can also use it, but more and often you can just be on the lookout on the likes of H4, H2, H1 time frames. All right, so you can pay attention to it that way. Do you understand?
yes, thank you.
Because for instance, this is say you want to use it as an entry this thing right now. So this is a very good example right here. This is H1 time frame. All right, this is H1 time frame, and price became bullish from here. So we took out this eye, took out this external. So it is okay for itself if price to take out this one, but then price did something quite different. This guy closed within that range, so it means this now becomes your internal, and you are paying attention to buying opportunities, right? So it is okay now for you to just be on the lookout for this one, and you can see the same thing right here. All right, price took out this low, being the internal right now. This became the internal instead of this one, and from here, what can we pay attention to now? Just like I said, from there, you can now still work with the same logic on liquidity from this point. All right, we've taken out this previous H1 low right now. The high is still standing. All right, the high is still standing. So it means what? You can just pay attention to buying from this. I mean, from the moment this guy closes, you can just pay attention to buying until this one is taken. But then overall, you should know that based on your analysis, maybe this is your external or this is your external. All right, so that is just how it is. So now this is a practical example right now. All right, this example right here, this is a practical example right here. And look at the same thing right here again. We took out this low. All right, we took out this low. And it is okay for you to expect price to take out this one, but what did price do again? This is H1, remember? What did price do again? Price took out this one. Now this became the new internal instead of this one. And for every internal you have, there should be an external. So this became our internal, so automatically it makes this one our external. So you can see what price did. Price internal taking, external targeted. So that is just the way it is. All right, that's just the way it is. That's it. So I believe that is all for now. And yes, look at I also said something earlier. See, this is a situation whereby the same candle does the full delivery for you. Look at it. This guy took out the external. We are bullish. The same candle finished up the delivery. Can you see? The first example, like the first template I shared, the same candle finished up the delivery. This is it right here. So if you pay attention, it is easy for you to follow through. I kid you not. It is easy. All right, so that's it. So I'll see you guys I'll see you guys. I don't know if I'll be available for a market review by weekend, but if I will be available, I want to relate that with everyone. So we just have a call to just pay attention to what to expect for the next week. All right, so. And tomorrow is Thursday for Thursday expansion. If I also have anything I'm anticipating tomorrow, I would send my expectation into the chat into the group as well. So thank you very much. Good night, everybody. And also, let me see. I need to confirm something right now. We have 11 persons on this call. This is bad. So I know those of you guys that are barely on this live course, you guys are gonna be listening to this whenever you're watching the recording. A time would come, I would just have an important meeting. I might even record, but I won't share the recording. So this is for every one of you that's that are barely on this live course. So don't be surprised if you realize we held a meeting and then the recording isn't shared. So that is that. So good night, everybody. Thank you very much for tuning in. Have a good night, everybody. Thank you very much. Bye bye.